Welcome back, folks. We had the Dow finish down 20, NASDAQ off 17, S&P's down 6. And let's go over to our man, Mr. Chris Gaffney. Chris, folks, is the president of EverBank World Markets. And if you come over to our website at TFNN, you're going to see the banner on the right-hand side. As you pull this banner up, what you're going to see, and I know many of you have this product right now, it's an amazing product. It's a 5-year MarketSafe Commodity CD. If you don't have this one, you've had other ones. Inside of this product, folks, we're going to have Chris walk us through it. There's a $1,500 minimum. Your deposit is protected. Your principal is protected 100%. It's an FDIC product. It's IRA eligible. And, you know, when we talk about King Dollar, it's pretty amazing. You know, the Fed basically didn't go up on rates. Well, went up 25 basis points. Bottom line is that King Dollar has been going lower for quite some time right now, which gives commodity room to breathe. Chris Gaffney, welcome back to TFNN.
It's always a pleasure to be here. Thank you.
Absolutely. You know what's amazing, Chris, is that in the course of even like the last year, the mantra, I think, for all of us was, hey, the Fed is going up, has to go up, all of the above. But yet, you know, when we looked around the world, you know, we're at negative interest rates, and we have pretty high rates as it is, yet they're low, right?
Yeah, comparatively speaking, yeah. And you know, you made a good point in your opening that, you know, the King Dollar, as we called it, most investors thought that, you know, with the difference in interest rates, with the divergence of the central banks, and that the U.S. is looking to raise and everybody else is lowering,
yes, that
the dollar would continue to rise. And, of course, that really creates a lot of headwinds for the commodities because they're dollar based. So
sure,
got a dollar-priced commodity, you know, oil, the precious metals, and most of the major ag commodities. They're all dollar-based. So when the dollar rises, that creates strong headwinds for the commodities. And in fact, in the first quarter, what we've seen is everybody kind of pulling back on those interest rate expectations here in the U.S., and therefore the dollar has actually slid the first quarter, and we've seen the commodities start to come back, especially those precious metals. You know, they're the best performing asset class in the first quarter. So,
and I saw, you know, and the number, which is pretty amazing, it's that first quarter, folks. You know, now needless to say, you know, precious metals had got hurt from 2000, you know, and let's see, 2011, 2012 coming down, but that was the best quarter since something like 1987 or something. I mean, it's
30 years.
30 years, yeah, it's a big number. So let's talk a little bit about this MarketSafe Commodity CD. So inside this CD, folks, okay, you have WTI crude oil, gold, silver, soybeans, corn, sugar, copper, and nickel.
Right.
So can you explain how this works, Chris?
Yeah, we wanted to give a package of really diversified on the commodity front. So we've run them as you know, we've had them based on metals before, on
sure,
precious metals, on industrial metals, but this one also adds in a couple agricultural commodities. And the way it works is this is a 5-year CD that is. The return is going to be based on the performance of these 8 different commodities during that 5-year term.
Right.
What we'll do is we'll take and measure the price of each of these commodities at the first pricing date, and then compare every year. There'll be 5 annual pricing dates, and so every year we're going to take those prices, compare them to the original price, and then your upside or your performance on this CD is going to be based off the average return of those commodities compared to the original. There is a cap of 70%. So
yes,
the maximum you're going to be able to receive on this CD is 70% over the 5-year term. But you know, granted, if we're at the cap, that's still a pretty good return for investors.
Well, slightly, because, folks, if you want to look at the safest, you know, investment out there would be a 2-year Treasury, and just so you know, it's at 0.6%.
Yeah.
You know,
and the key here is there's no downside. So you know, your principal is guaranteed. So even if somehow these commodities slide even further from where we are, which we're looking at, commodity prices in general are maybe not at their lows, but they're pretty darn close. And we bounced back a little bit this first quarter. But if commodities should slide further from here, you're guaranteed to get your principal back. And that's a key in these markets nowadays, is that, return of principal is really as important as return on principal, and especially with the way these volatile markets have been. So.
And there's no doubt. And what's so cool, folks, is this. So check this out. I know many is, maybe want to be in the gold market, the silver market, or you're trading, basically agricultural commodities. The key here to wrap your head around is that you have 5 years, number one. And there's so many more people in the world every year. When I look at this, Chris, I'm saying to myself, guess what? When those foodstuffs in there, the bottom line is that when you look back in history, things just get more expensive. I mean, particularly when you can, get over 2, 3, 4 years inside an investment, which is pretty cool.
Right. And a key there to those foodstuffs is, the emerging middle class in China and India. And I have to really think about all those people that are changing their diets as they get more disposable income. The middle class individuals change their diets, and it creates more demand for soybeans and corn and sugar, and we see that as really something that's going to move the global economy going forward, is those middle classes in India and China, and those huge populations of people moving into more consumption oriented economy. And
there's no doubt. I mean, and I'm old enough to remember in the United States, folks, when if your father made $10,000, that was a big deal. I remember my father first made it. It was like that was a huge deal in our family, and it's amazing as a society how fast you can go from 10 to 30 to 40, and the next generation can go more. And that's where China is right now. When I was looking at some of those wages, I says, what, man, China is sitting right where we were sitting in like 1965. And it's right. Pretty amazing how fast that can come up.
And that's really going to drive the global marketplace and also create more demand. And of course, the slowdown has eased back, and we've seen commodities have been hit with kind of a perfect storm of a strong dollar, lowering demand, and slower growth. Those are shifting. We're seeing the dollar start to weaken. We're seeing demand start to increase again. I think we're going to start to see some inflation ticking back into the global economy, and that should be good for commodity prices.
There's no doubt. So come over to our website at TFNN. You'll hit the EverBank banner. You want to do this right now, folks, because it's you have to open this by April 14th. It's very easy to do. You can give them a call at 855-750-4051. It's 855-750-4051. And remember, it's an FDIC insured product. It's IRA eligible, and your principal is 100% protected. Chris Gaffney, you have a great one, safe one. Look forward to having you back on again, man.
Appreciate it.
Have a great one. You stay right there, folks. We're coming right back. There's no doubt that we're getting inside earnings season, and we talk about the metal market. Well, Alcoa is going to be coming out with numbers, folks. So we're going to be coming right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new MarketSafe Commodity Solutions CD from EverBank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. EverBank is a member FDIC.